Okay, now we come to questions number 2. So in these questions, you have AAT and DJH. So we'll explain about AAT first. If you look at AAT, these questions, they have using this car to change with another car, in which is AAT change with KGC. So this is a trade-in. So trade-in and normal disposal, the difference is only trade-in, you will not be able to receive cash. You will be able to receive your car in replacement of your cash. So let's see how things work here. So first, this is the first car. So we need to calculate the depreciations. So if you look at the year end is different. It's not from January to December. It's in fact it's from January to March. So if you look at this company, their year end is from 1st of April until 31st of March 2017. Okay, so since it's a trade-in, so we go to disposal account. And if you look at this question, okay, if you look at these questions, AAT first year is from 2013 until 2014, and then second year is 14 until 15, third year 15 until 16, and come to current year is 16 until 17. Okay, but if you look at here, because this year you are going to sell it on 30th of June 16, so you cannot reach until 17. Instead of 17, you will stop at 30th of June 16. So if you look at here, you use only 6 months in the first year, and then 12 months means 1 whole year in second year, 1 whole year in third year, and this year you only use 3 months. So now we need to calculate the depreciations. We need to calculate the depreciations for this asset. 8,500 is their cost minus the residual value divided by number of years. So total every year you need to depreciate 1,200. So next year. So if you look at here, 1,200 for the full year on second year and third year. For current year, depreciation is 300. First year depreciation will be 600. So now when we calculate the depreciations, accumulated depreciations, and motor vehicles, we need to open these 3 accounts. Okay, so motor vehicles, we will only do the current year. So if you look at here, current year opening balance, you have 8,500. And the disposal, because we trade in, right? So you go to disposal account. So disposal account, you'll have another 8,500. So accumulated depreciations total is 3,300. 3,000 is from 600 plus 1,002, 1,002, total is 3,000 plus current year 300. So you have in total 3,300. This is for your disposal. Okay, because you sell it, so no more. So you will have disposal, double entry. Okay, and then for depreciations, current 300, so you go to disposal 300. Okay, guys. Now, next when you look at here, so disposal, you have 8,500 from here to this double entry. Accumulated 3,003 to 3,003. Okay, double entry. And also your this one, trade-in value. The 5,000, if you check the trade-in value, 5,000 is here. They say trade-in allowance was 5,000. So 5,000, you recall in 5,000. So after you calculate, total here is 8,005 minus 8,300. So you have a loss of 200. So record 200 loss. Now, bear in mind, this question, it mentions that you was trade-in with another car, right? So this car, trade-in allowance is 5,000 and the total cost for this car is 15,000. So means that now you have another account, motor vehicles account, this one, okay. Your motor vehicle account's opening, because you buy, the cost of this asset is 15,000, but how you pay it is different. Okay, how you pay it is, you pay by a car. Okay, you pay by a car, 5,000, so here you have 5,000, double entry, the trade-in allowance, and then total cost is 15,000, right? So the balance, the question mentions, partially by cash, partially by loan. Loan is 6,000. So means that you pay loan 6,000 and the balance 4,000 you pay by cash. Here, balance 4,000 you pay by cash. So if you carry down to next year, the total cost is still 15,000 because you didn't you didn't dispose it, so you carry down the whole amount. So later on, when you calculate the depreciation for this asset, yeah, it will be 15,000 minus the 4,000. The 4,000 is the residual value here. They expect to have a residual value of 4,000. Estimated useful life is 5 years. So you will use 15,000 minus residual value divided by number of years. Okay. Then you need to times how many months you have used it. So in this case, you have been using it from June, 30th of June, means from 1st of July until next year April. Next year 30th of March. Okay, so you have to calculate how many months and then divide and you get it. So this is for AAT. Then next we are going to look at another one is which one? Let's see. Okay. Number 2. I tell you that estimated useful life. Okay, estimated useful life for DJH reduced from 6 years to 4 years with no changes in the estimated residual value. So look at the information before. You have buy it in 2014, 12,000, 2,000 residual value, 8,000 is the useful life. So the asset, yeah, this asset you buy in 1st of April, 14, useful life is until March 15, right? And now is in year 2017. So by right, this is year 1. Then from here 15 until 16, this is year 2. So here 16 until 17, this is year 3. So far, okay or not? So current year, this is the 3rd year you have been using it. Now, according to the question just now, if you check here according to the questions, useful life is 8 years. Means that I'm supposed to use until year 4, year 5, year 6, year 7, year 8. Okay now guys? So here, if you look at this, they want to reduce from 6 years to 4 years, okay? Estimated useful life. You're going to reduce from 6 years to 4 years for this year onwards. So from this year onwards, okay, from this year onwards, your useful life is no longer, by right here, from this year, they will have 6 years. Okay, 1 year, 2 years, 3 years, 4 years, until 6 years. But now they say, I think my car cannot last that long anymore. We are going to change to only 4 years. Okay, so now what should you do is you need to recalculate the residual value or not. Recalculate the depreciations for the asset. Okay, you need to recalculate the depreciations for the asset. So we calculate the old depreciation first, then we calculate the new depreciations. Okay, now the old depreciations, if you look at here, the cost is 12,000, right? Check. Just check. Your cost is 12,000. Residual value is 2,000. So 12,000 minus 2,000, you got divided by 8 years. So every year you depreciate how much? Every year you will depreciate 1,250. Wait, let me get. Okay. Now, so 1,250 every year. Okay, so for the first year, minus 1,250, second year, minus 1,250. But when it comes to year, before you calculate the depreciation, they say change. So change the depreciations year. No longer by 8 years, they want to change. You can only use for another 4 years. So now the value of the asset is 12,000 total, right? But after 2 years of depreciation, you minus 2,500. Okay, so the net book value for your asset is now at 9,500. Okay, so far can you follow, guys? 9,500, are you okay? Can now, okay, so now if you look at this 9,500, this is your new value. The question say with no changes in estimated residual value, so minus 2,000 still your residual value, but divide by no longer 6 years, is 4 years. So every year you will depreciate by different amount now. So this year you will depreciate 1,875. So instead of depreciate 1,215, now your depreciation is for current year, it will become 1,875. Get it? So when you record double entry into your T account later, the number of depreciation change. Okay, the number of depreciations change. But in terms of the double entry, debit and credit, no changes. Okay, because you still use this asset, you did not dispose it, so the others is no changes. So this one, you guys okay so far?